The 504 secondary market is essentially broken, with only a small percentage of 504 sold to the current publicized buyers in the marketplace. Jon Winick, CEO, founder, Clark Street Capital. What are you saying with that statement?
Well, I just think that if you look at the universe of active 504 sellers, they're really only doing maybe 75 million of 504s a year. And as a percentage of 504s, I mean, that's a pathetic percentage. In the heyday, perhaps as much as 20% of 504s were being acquired by the players in the business. I actually had an banker in Utah that was fairly active in 504 sales. And I said, well, what if you took every 504 loan and you submitted every 504 opportunity to every single secondary market buyer? What percentage do you think they would do? And I said, is it 10, 15, 20%? He said, you're lucky if you got to 5. So currently, the current official list of buyers is not sufficient to meet the needs of sellers.
Clark Street's Capital, Jon, what is your answer?
Well, I think we are filling the void in the 504 secondary market now. We've already done one successful offering where we had over 75 people execute the confidentiality agreement. It was a $10 million deal. We had over a dozen bids, 2 sellers. And our plan is to run quarterly 504 first mortgage sales, working with multiple originators to basically create a larger offering. We have found in all our deals that the larger the offering, the more interested parties. If you can get to at least 10 million, typically you are getting a broader audience than trying to sell 2 or 3 loans. And certainly competition and doing this on a competitive process yields better pricing and less pressure to re-underwrite the loan.
Jon, this is listened to by bankers. They're listening, they're watching us. How do you want them to participate in the next offering?
Well, we want them to consider, as a seller, to participate in this offering. I don't care if you submit 1 loan or 5 loans or a couple $100,000 or 5 million, but it's an opportunity to join a broader marketing effort by, instead of trying to sell 2 or 3 loans to the 3 parties that are out there now, you have an opportunity to sell 2 or 3 loans, which are part of 20 or 25 loans to literally dozens of potential banks and buyers all around the country. So it's a much more broadly marketed effort.
The 504 secondary market, the hiccup seems to be the underwriting at the secondary market level. How are you and your staff, your fund, going to approach that?
Sure. Well, I think our investors find that our asset summary reports and our data tapes are the best in the industry. It's typically very easy to figure out these credits. Certainly the seller has the relationship with the customer, so we'd like the credit write-ups to be somewhat recent. We'd like recent financial statements. Certainly getting 2015 financials would be critical for any loan that we're doing now. And certainly the better information we get, the easier it is for us to put together our write-ups and data tapes.
Give me the logistics. What are the dates? What's your timeline?
So you have till Friday, April 29th to submit eligible loans. Really, any performing and good loan is eligible. We don't want any classified loans or loans that have been 30 days past due, but we'll consider any state, all property types. We're obviously sensitive to the mix of the portfolio, so we're obviously going to take that into account. Sellers are going to be protected by the fact that bidders bid on either a seller basis or on a loan-by-loan basis. So somebody could bid $15 million on a $15 million pool. It could be 3 sellers, but they're going to have to allocate their purchase price by seller.
Great.
You're going to have to agree to a single confidentiality agreement and at least a single draft loan purchase agreement.
Jon Winick, CEO, founder, Clark Street Capital. Very, very needed in today's marketplace. Thank you for talking to us. Thank you for putting this fund together.
Thank you, Bob.